Okay guys, what are you saying, and welcome back to your favorite YouTube channel. So today guys, I've got another trade breakdown video for you. We'll be talking about my shorts on the AUDUSD for roughly 146 pips. We'll be going through the complete trade, how I came up with the trade idea, and my execution, stop loss, targets, trade management, risk management, all of that will be discussed in this video. So stay tuned. But yeah, first, before we admire the trade, we're going to break it down and find out, why I shorted the market and all of the good stuff. So the way I trade is I utilize the higher time frames to develop a directional bias, and then I use that on the lower time frames, 4H and hourly, to find specific levels to actually trade it and maximize my risk to reward. So from a monthly perspective, when I look at the monthly time frame, I'm normally focused on the candlesticks, not necessarily the whole trend of the monthly, because again, I'm not really holding trades that long, but the monthly candlesticks, especially the candlestick structure, do provide with a lot of information from a swing perspective. So you can see the market was struggling to break through some highs here, formed a high, came back down, breaking through these lows, formed a low, lower high, low, equal highs there, came back down, broke through that low. So you can see already the monthly is showing bearish candlesticks here, but bearish candlestick structure, I should say. Obviously there's bullish candlesticks, but bearish candlestick structure, breaking through lows, lower highs. So if the monthly candlestick structure continues, I'm expecting this low down here to be taken out and some more downside. So from a monthly perspective, everything is looking bearish, and long term, we're expecting the market to come into these lows, which is still in the process of doing. So monthly is looking bearish. Jumping onto the weekly, we're looking to see if we can get the weekly and the monthly to agree, and in this case we do. You can see the highs the market's creating, high, lower high, lower high. This is a big fake out of that high there. You can see we came straight back down and broke structure just after we faked the high. So it's a very, very textbook fake out there. And we formed another lower high. Then here we're anticipating the market to form another lower high. Reason being because we haven't actually taken out the lows yet. So we're anticipating that being the next lower high. And we do have a nice little bearish trend line here connecting those points. As you can see, it's not the best trend line in the world, but it does connect those lower highs, which is its job essentially. And this is our fake out there. So from a weekly and a monthly perspective, everything's looking bearish, which is good. Now we want the daily to agree with our weekly and monthly. And again, you don't have to have all the time frames lining up, but from my experience, when you get most of the time frames lining up, especially the higher ones, the win rate is a lot better. So if you just got a daily and a weekly bias, good, or just a daily bias, good. But if you can get all three of those, fantastic. So yeah, AUDUSD from a daily perspective, I'm looking to see if the daily can agree with the weekly and the monthly. And here you can see nice structure here as well, giving us a head and shoulder pattern, left head and the right shoulder. So again, daily looks like it's getting ready to roll over to the downside as well. So daily, weekly, and monthly all looking bearish, and structures pointing down, and our targets for the swing move is to take out these lows here. It is what we were expecting price to do if the trend does continue. So now I'm dropping to the 4H time frame to find areas of interest where I can look to enter my trades and take advantage of this move. Normally I give myself 1, 2, maybe 3 areas of interest to map out where price can potentially pull back into, and from there as well look for my sells or buys. So my areas of interest were these two levels, so 0.704, just in case we push past this high, I would still be looking for that low high to form, and it still gives us our our left head and right shoulder, just should be slightly higher up. So these are my 2 areas of interest. If this was going to be the lower high, I would expect price to react with this consolidation and dump. If it's going to push a little bit higher, then I'll still be looking to get engaged with the shorts up there. So that's what I'll be looking from a 4H perspective. Now all I just want is price to get there. Then I'll look for my entry confirmation. So if I press play, you can see we finally get there. Nice bullish candlestick into that level. Then I drop to the hourly, and then I look for my entry signals. In this case, we had a nice bearish engulfing variation pattern, combining this bullish candle. It's not really a doji, but a small bearish candle, small body bearish candle, and that nice bullish candle there. That gave me my entry signal. Stop loss was a few pips above this room, above the high, sorry, to give me some room to work with. Again, nothing crazy, but candlesticks aren't always accurate. So when you enter with candlesticks, if you're entering off candlesticks, you want to give yourself some room to work with, just in case price does wick back up against you before going your direction. And targets, my targets wasn't originally these lows here. Overall in my head, that's what I'm expecting price to get to, but I've learned the hard way that it's always good to make sure you target areas where price can potentially reverse against you, not necessarily where you want it to go, because we're not trying to hit the home run each time. So the way I kind of counteract that is target the areas where price could reverse against you. And if you do have a higher time frame bias or you do have extended targets, take majority of your position off. In this case, I'll show you what I did, and then just leave a little bit to trickle to the end. So my area of target, or final target as well, I had a couple. This was my final target for the move. Price coming back into that little area of consolidation, which is this range here, and this consolidation gave us this big move to the upside. So I know if price wants to reverse against me, this could be the area that price does it. So this was my target, my main target for AUDUSD. So as you can see, if I go back on the hourly time frame, we had a pretty nice drop to the downside. The move went pretty quickly, consolidated for a little bit. Nice move to the upside, and eventually fell and hit that target. So that was a nice move in itself. Ooh, didn't quite hit the TP there, so one more pullback needed. There we go. So yeah, we hit the target. So at this point, the trade is technically complete, but like I said, I know from the higher time frames that there's a good chance we'll go back and take these lows out. So there's a good chance we could go for 146 pips. Probably extend that an extra 100-ish to the downside. So I took around 80% of my profit here because the trade is done. I don't want to risk floating profit just for price to come back to my entry price and erase that. So I take around 80% of my profit. I leave 20% to run to go and hit this target, which is around 250 odd pips to the downside, which is our weekly low and monthly low target. So that's me utilizing the higher time frame. So I've taken most of my profit. Now I'm leaving a little bit to trickle, and I don't really use a trading stop loss either. But if in this case scenario where I've taken most of my profit and I'm leaving 20% to run to an extended target, that's when I'll use a trading stop loss. So normal trades, I don't use trading stop loss. I kind of let it run, give it room to breathe. But in this case scenario, this is now when I step in to use my trading stop loss. So if I do play it on, I had my trading stop loss above this high over here. So when price took out this low, which eventually did, so when it eventually took out the low, I had my trading stop loss above there, and I was looking for price to come back into these lows. So as you can see, we came and we start to consolidate. So when we saw this consolidation, that bullish engulfing candlestick, and this potential double bottom on the hourly, it was some slight red flags because obviously the market is already coming into the level of support, but the way I trade is I always look for the market to take out wicks. If it's the direction of the higher time frames, I always look for the market to take out wicks, and eventually did. But unfortunately for me, the market did retest that range, similar to my entry up there, retesting the range. It did it again there, and it pushed the upside. So I did close another 10% around here. Then I eventually got taken out with my trading stop loss around here for the rest of the position. So it was a really nice trade. It was managed very, very well as well. Unfortunately, once it did go and hit my stop loss, as you can see if I press play, it eventually did dump and actually go and take out those lows, which I was expecting price to do over there, but it just wanted to have one more pullback, and it was difficult to catch this. I was looking to try and get back involved, but it was news again, huge candle, difficult to enter, and then it didn't really have a pullback I was looking for. But yeah, it did go and take out those lows, just didn't do it when I was expecting to, but that's why we managed profit. Because let's say if I didn't take 80% there, and I just had full volume floating down here, I would have got taken out of the trade there, and I just gave away a lot of profit. Still would have made a positive return, but we could have made much more just by managing the trade a little bit better. So yeah, that's the complete story of the trade from a directional perspective, management, profit taking, target, stop loss, entry. Hopefully this does make sense and kind of gives you insight to where I trade using the higher time frames because they're generally the strongest. for directional bias, and then just using the 4H and the hourly for entries and areas of interest, and just trading with the trend really, just to maximize my win rate by using the higher time frames for directional purposes. So hopefully this video made sense. If you have any questions or didn't understand anything, leave a comment down below and I'll be sure to get to it. If you want to see more of these type of videos, please let me know, leave it down in the comments. Or if you want to see different type of videos, again, just leave it down in the comments and I'll get to it. If you have enjoyed the video, please be sure to leave a like, subscribe if you haven't done already. But yeah guys, I'll catch you all in the next one.